In this week's Robinhood analysis, we are going to see if the upside will continue or if it will get stopped out and reverse back on down. Welcome back to Fintech Spy, where we dive deep into fintech charts and market trends. If you are new here, hit that subscribe button for more technical breakdowns. Let us hop right into Hood. Before we begin, as a reminder, I am not a financial advisor, and you should do more homework than just this spy on what the chart is doing. Over here on the weekly view, our march up and up continues. Starting down on analyzing the MACD, it has begun its trend back to the upside. I expect by the end of this week for those lines to be much closer to crossing over, which would be a strong signal that momentum is still building. The Stoch RSI has now entered that neutral territory, which has allowed for more volatility to transpire, just like we talked about earlier in the week. Even though price has not dropped quite as far as I originally theorized, that extra back and forth has created some very tradable swings. If the price does dip down to around 128, that is still going to be an excellent buying range in my opinion, especially for anyone looking to position into next week. Based on the size of the candles for the past 3 weeks and what this one is shaping up to look like, I could still see the range this week being from 128 up to around 143, with us potentially settling somewhere in that 138 area by the end of the week if buyers keep stepping in. Moving over to the daily view, the indicators here have made it feel like we have hit a bit of a plateau. The Stoch RSI is still pegged at overbought, and the MACD lines are starting to drift closer together, which usually tells us that momentum is slowing down. It seems like a nice healthy pullback to the 131 area is needed tomorrow in order for a continuation to happen and for this trend to stay sustainable. Right now, the 50 EMA is sitting down at about 127.81, so as long as we do not pull all the way back to that level, the structure of this daily uptrend should remain intact. If we can get that shallow pullback first and then catch a bounce, especially with the rate cut news in the background, it could set us up nicely for another attempt toward those all-time highs. Coming over to the 4-hour chart, that sense of plateau shows up even more clearly. Here, the Stoch RSI is actually sitting down in oversold territory, while the 50 EMA has crept up to around 132. From this intraday viewpoint, a pullback into that 132 band looks like the more likely bounce zone, rather than a deeper move to 131. This is exactly what I was worried about if the pullback did not happen before the rate cut announcement. We just did not have enough juice left in the tank to keep propelling higher on good news alone. Now the 4-hour chart is telling us we need that reset first before any new leg up can really take hold. Looking at the December 12th options chain, not much has really changed from our start of week review. Puts and calls are still fairly unaligned, almost like the bears are letting this resistance zone go for now and choosing to fight another day. The biggest, nearest chunk of open interest still lies at the 125 strike on the put side, with a growing amount now building at 130 as well. The calls, on the other hand, are still gathered in that 137 to 140 range, showing that bulls are eyeing that upper band as the place they would really like to see price finish the week. With these numbers still in play, I think a pullback tomorrow, followed by a strong rocket move on Friday into that 140 area, is still very much on the table if the tape cooperates. Robinhood traders have a lot to look forward to heading into the end of this week. Even though Plan A did not quite execute the way we wanted, Plans B and C are still on the table. As we approach what looks like a healthy bounce point, with a catalyst that could still help propel the stock closer to all-time highs, this could yet turn into a very profitable week. Just like that though, if the move happens too early or without that proper reset, we could quickly run out of steam and end up turning right back to where we started. With this being one of the last full trading weeks of the year, look for a lot of bigger entities to start closing out their winnings for the year and locking in gains while they can. For now, my outlook is optimistic. The risk is still there, but it is diminishing day by day. If you agree, disagree, or want another ticker in the spotlight, drop a comment and we will spy on it next.